Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition, and our focus is on PNB Housing Finance that's reported its numbers. Good set of numbers coming in. A 25% increase in consolidated net profit to 433 odd crore rupees. In fact, it's beat estimates on most of the accounts. We've seen the total disbursements rise by about 19% to 4,398 odd crore rupees. The net interest income has risen by about 4% to 651 odd crores. Both the GNPA as well as the net NPA have actually seen a decline as well on a year-on-year basis. We've seen the net interest margin stand at about 3.6%. That's remained steady over the previous quarter. To detail for us what has gone well for the company in this quarter as well as what's the outlook going forward, we're now joined by the top management of the company. Mr. Girish Kousgi, the MD and the CEO of PNB Housing Finance, is with us right here on the show. Warm welcome to you, sir, and great to have you with us on Business Today Television. Congratulations for posting yet another strong quarter for our viewers and shareholders of yours as well. Do tell us first up what contributed to this quarterly earnings, and will the momentum sustain is more important to understand, because this is just the beginning of FY25. So do we expect a steady growth on the same parameters as you have seen in Q1, sir?
Good afternoon, Sakshi. I think if you look at any year, quarter one is no more cyclical and it's going to be muted. I think luckily for PNB Housing, we have done pretty well in quarter one, and the remaining quarters in the year is going to be phenomenally superior than quarter one. So that's number one. And this happened because we invested in branch expansion. If you look at last year, we opened more than 130 odd branches. In last 2 years, about 180 plus branches. So as of last quarter, we had 300 branches. Now we have 303. So I think the new set of branches started delivering, and that has really helped us to show a disbursement growth of 19%, not just on disbursement, even on the book growth of 14.4. We have guided 17% book growth on the retail side for this year. We'll be able to reach that number. And if you look at other parameters like the cost of borrowing has come down from 7.98 to 7.92. Incremental cost of borrowing has come down to 7.75. Margin is stable. It was 3.65 last quarter. This quarter also it's 3.65. If you look at credit cost, it is muted. It is negative 7 bips. So I think overall it was a very good quarter, and we like to build from here on.
Right. So let's get into the details now. If you could help us understand the demand scenario on both premium housing as well as affordable housing segments going forward from here. How do you see that pick up? And if you could also break up for us your loan growth and disbursements growth for both retail and corporate, and the disbursements outlook.
Sure. So corporate, no, we were degrowing the book. So we plan to restart from H2 of this year. As of now, the book is about 1830 crores. So we will start doing corporate business in next few months. On the retail, out of total book of 67,000 crores, retail constitutes to 97.4%, which is 65,130 crores. So within retail, we operate in three segments: affordable, emerging, and prime. So prime is a very vintage book for us. We've been doing this business for a long time. We started affordable close to about 2 years back. Affordable book is now 2,360 crores. Our plan is to take this book to 5,000 crores by this year end. So we have huge growth aspiration on the affordable piece. On emerging, we plan to grow at 18%. Both affordable and emerging business will be at a high yield business. So we are changing our segment. So overall, it's going to be 17. If you look at affordable, we'll be growing at about 160%. If you look at emerging, it will be about 18%, and prime would be single digit. That's as per a plan.
Okay, and AUM, the entire assets under management, what is it at, and where do you see that growing to?
I think because as of now, our focus is on to grow our book. So obviously, the book is now 67,000 crores. Our plan is to take it to 1 lakh crore by FY27, largely focusing on retail. The corporate book at its peak would be less than 10% at any given point in time. So our focus is on retail. So we will do retail, high yielding segments. Corporate, we will restart. Even that would help us on improving our margins.
Okay, got that, sir. So since you also talked about emerging and you're looking to scale up there, what is the plan in the tier 2, tier 3 series? Which are the geographies you're looking to add there?
Every year we plan to add about 50 branches. So largely the branch expansion is going to be on affordable and emerging because we see there is huge potential, huge opportunity on affordable and emerging. There is opportunity on prime as well because there the margins are lower. I think we have moved away from super prime and to a certain extent from prime, and therefore our focus would be on emerging and Roshni to a large extent, and the prime would be more of a balancing number in terms of growth, but in terms of opportunity, huge opportunity. And given the scheme what is expected on PMAY, there was a high level announcement in the budget couple of days back. So we are expecting this scheme is going to be really big. It's going to propel demand, and it's going to help companies which are largely focusing on affordable and emerging. So PNB Housing would gain to from this particular scheme.
Okay, got that. Now, do tell us, you were mentioning on your NIM that has remained steady, but definitely ahead of your own guidance. Would you be building on the guidance from here on for SA FY25 and FY26? Where do you see NIMs growing to?
See, on NIM, I think it will be stable for next 2-3 quarters. Since we are changing the mix, we will be starting corporate business, which will improve our margin, and also through PMAY, the funding from NHB to the lending institution for let's say PNB Housing, the cost is going to come down. So cost of borrowing, we see some scope. We are changing segments and we're going to restart corporate. I think all these things would help us to improve our margins, but that would happen after 2-3 quarters time. We will be stable for next 2-3 quarters, then it will start inching up.
Okay. So on your cost of funds, could you tell us how much has it come down by? And in terms of guidance also, could you tell us what is your expectation there?
So if you look at cost of borrowing, last quarter was 7.98. So this quarter it has come down by 6 bips to 7.92. Incremental cost of borrowing is 7.75. So there is a huge drop on the incremental cost of borrowing. And if you remember, in last couple of quarters, even our rating got upgraded from AA to AA plus from all the four rating agencies. So that's going to help us to further bring down cost to a certain extent. But largely the play is going to be on high yielding segments and corporate.
High-yielding segments and corporate as well. Okay, we'll continue to keep an eye out on that front, sir. Also, I just wanted to get a sense as far as we've just come out of the budget and there were several announcements. What stood out for you as the key highlight for your own particular sector? Do you think the budget had enough to provide some further impetus to the industry?
I think from housing sector point of view, I think it is a big plus for the industry. I think more specifically from PNB Housing and all the other housing finance companies, PMAY scheme is going to be quite substantial. It is going to help on three fronts. One, the borrowing would come at a lower cost, so that would help the companies to reduce their borrowing cost. That's number one. And number two, this time the expected margin on PMAY loans is going to be better than what it was in last couple of terms. So that is going to improve the NIM margin. And the third, this is going to propel growth. So it's going to help us on growth, on margin improvement, and also in terms of reducing cost.
Okay, got that. Sir, anything else that you'd like to suggest? You may have assessed the indexation announcement that was made on the budget with respect to real estate as this indexation was removed. There's a lot of hue and cry around saying that this is going to be definitely a big dampener. How have you assessed the situation since you're closely related to the real estate sector? What would that do?
See, I think in any budget, we need to balance. Obviously, if you look at the budget, it is a very well thought out, planned budget, and it is definitely going to help the industry in the long term. In the short term, there could be certain impact, but I think keeping medium term and long term in view, I think the move towards housing and real estate, we see it as a positive move. Certain things could happen on an immediate basis, and certain things the impact could be felt maybe after few years. So I think overall for real estate sector and housing finance industry, I think it is a big positive. Yeah, there might be a couple of things in terms of indexation and other things, small tweaks there, but I think overall it's pretty good.
Okay. And lastly, sir, also just wanted to get a sense on the high hopes that are building around the interest rate cycle reversal and rate cuts to happen both globally as well as domestically. By when do you see that happening in the domestic market per se? And what would that do to the already steady demand that you're looking at within the housing segment for loans, sir?
So one is on the demand will only improve. So I think very clearly, the demand is so high with government push through various schemes, the demand is only going to go up. That's number one. In terms of interest rates coming down, earlier we were expecting it to happen in H2. As of now, it looks like, we would have probably postponed by a few more months or maybe a couple of quarters. So it may happen this year, but definitely not, in next few months. And if that happens, obviously, it is for the entire industry. So the repricing would happen both on liabilities and the asset side. There could be sub gap. I think in the meanwhile, we would have changed segment and tried to improve our margins. So we feel the impact is going to be little less.
Okay, fair enough. Well, on that note, thank you so much, Mr. Kousgi, for being with us on this show. Yet again, congratulations for a good set of numbers, and we hope that you have a steady set of numbers coming through the rest of the year. All the very best for the rest of the quarters, and hope to see you back on Business Today television yet again to share the vision of your company going forward with our viewers. Thank you. All right, viewers, we'll wrap it up at that. The special conversation with PNB Housing Finance on the earnings and the outlook and the macros, as well as budget announcements as to what it means for the entire industry and the sector at large. With that, we wrap up.